Hello and welcome to another video from TradeForexParttime.com. So today we're going to talk about a very important part of Forex trading, and this is the different types of orders. So to start with the pretty basics, a trading order is simply a request submitted by the trader to a broker for a certain type of transaction to be executed. So for example, looking at the Euro USD like we have on the screen here, if I think that the pair is going to increase in value, I'll simply submit an order to the broker to buy the pair. On the other hand, if I think that the pair is going to decrease in value, I'll just submit an order to the broker to sell the pair. And as a side note, a buy order is often referred to as going long, and on the other hand, a sell order is known as shorting. You're shorting the pair if you think it's going to go down. So there are a number of different order types which can assist traders to act more effectively and to enact certain strategies. So the first and the most simple type of order is known as a market order or an instant execution order. And this type of order is going to buy or short the pair at the going market price. So for example, looking at the pair on the screen here, the Euro USD is currently valued at 1.4165. So I could submit a market order to buy or short the pair, and my order will be executed pretty near to this quote. The price that I actually enter the market with may differ slightly because my order isn't filled exactly instantaneously, but the price that the market is at when my order is executed is a price that I'll receive. So executing an in-market order is pretty simple. In MT4 here, you're going to right click, you're going to go to trading, you're going to go to new order, and by default it's going to be sitting on instant execution. So now the next type of order is a conditional order, and there's two types of conditional orders. There's limit orders and there's stop orders, and we'll talk about both. Conditional orders are only executed when the market price hits a certain level that is entered by the trader when the order is submitted. And so we'll just start with limit orders, and it'll explain itself. So a limit order is going to enable a trader to set a certain price at which the order will be executed. And you can use this type of order to buy or to short. So in a buy limit order, the trader is going to enter a price that is less than the market rate, and so when the market moves down to this limit price, the order will be executed. And on the flip side, in a short limit order, the trader will enter a price that is greater than the market rate, and so when the market moves up to this limit price, the order is executed. So limit orders are going to be used when the trader that the price will bounce off of his limit price that he sets. And in MT4 here, you can execute a limit order by going to pending orders, and you're going to do either buy limit or sell limit, and then you can enter the price right there. So if I was going to set a buy limit, I would set a price that was lower, expecting that when the market price came down to the value that I entered, it would go back up. And on the other hand, in a sell limit order, I could enter a price here that is higher than the market value, and when the market came up to that price, my order will be executed, and hopefully the market then moved back down from that limit rate. So a limit order is going to enable a trader to set price edges at which he believes that price will move back from. So when I submit a buy limit order, as I said just now, I'm believing that when the price comes down to my limit level, it will increase from here. On the other hand, when I submit a sell limit order, I believe that when the price moves up to my limit level, it will decrease from here. Okay, so now the other type of conditional order is a stop order. And you can see here there's two different types. There's buy stops and there's sell stops. Now stop orders are slightly different from limit orders. They're similar in that I'm going to set a price level at which it will be executed. With a stop order though, I believe that the price will continue moving in the same direction when it hits my stop price. So with limit orders, we thought that that the market would come down or come up to a value and then reverse. With a stop order, we think that the market's going to go in one direction, hit our price, and continue in the same direction. So in a buy stop order, which you can execute right here, the trader will enter a price which is above the market rate. And so when the market moves up to this level, the order will be executed. On the other hand, in a sell stop order, the trader will enter a price which is below the market rate. And so when the market moves down to this level, the order will be executed. And so stop orders are going to be used when the trader believes that the price will continue moving when it pushes through his stop level. So looking at this pair once again, if I issued a buy stop order, I would enter a price which is above the current market price, expecting that the market would hit this value and keep right on moving. I could also, on the other hand, execute a sell stop order at a level which is lower than the market, expecting that the market would come down to this price, hit it, and keep going down. So a stop order is enabling traders to set price points at which they believe a trend will continue. So just recapping, when I submit a stop order, I believe that when price increases to my stop level, it will continue to rise. On the other hand, when I submit a sell stop order, I believe that when price decreases to my stop level, it will continue to drop. So a quick summary, a trading order is simply a request submitted by a trader to the broker for a certain transaction to be executed. Buying a pair is known as going long, selling a pair is known as shorting. And we reviewed 3 types of orders: market, limit, and stop orders. Market orders, like we said previously, simply are going to accept the market rate when the order is executed and filled. A limit order is going to be used to buy lower or short higher than the market, anticipating that the price will bounce off of this limit price level. And a stop order is going to be used to buy higher or short lower than the market, anticipating that price will continue in this trend. Thank you for listening to this video from TradeForexParttime.com, and please look forward to our next edition.